Welcome. Today is a review of October 18th trading day, and as well as the best setups of the day. So let's start with my own trades. First off, I actually planned for this setup here. So I noticed that I don't have it drawn here, but there was this tighter selling channel here, right, in green, and then we began to taper to this white one, right, which I have noted here. And when that happened, I was looking for some sort of breakout here with this liquidity on the left, and that inverse head and shoulder forming, right? Head, left shoulder, right shoulder. And that was and I do this now to show that I am planning and preparing and trying to visualize my trades before I take them. And all that's left after the planning is the execution of that plan, right? As long as your plan is where the best setup is and your plan is correct, meaning in the sense that you're planning where the best bullish setup is, where the best bearish setup is, you're piecing the puzzle together, you're piecing the intentions of the bulls and the bears. As long as that's done to the best of your technical abilities, of your analysis, then all that's left is your execution, right? And that's what I'm trying to work on is because Eric plans for every single trade. Several minutes in advance. I mean, he charts it out, he draws the algos, the structures, he literally types it and explains why he wants to take that trade to us. So when you take a trade, you have to ask yourself, what makes me want to take this trade? Why do I not want to take this trade? Did I plan for this trade? Did this trade follow my rules? So that's been a big recurring theme for me lately. So anyways, yes, there's just this basic idea, right? Very simple. White algo here. We start getting this volume coming in, defending the support, and I buy on the breakout. And I scaled around Eric's orange level, the 5 DMA, and it wasn't much more than that. I was kind of in and out. Good trade. I can't complain too much. So that was the first one. The second trade of the day was this, So this teal blue, whatever you want to call it, controlled buying was the exact same teal blue controlled buying that we get here. This is a better example. So this is the exact same as you can see this controlled buying. It's the exact same as Eric's red or magenta. It's like that purplish reddish color controlled buying on his chart. And in the morning we had formed that head, left shoulder, and then right shoulder formed on the break of that controlled buying. And I didn't take the trade because it didn't retest or there wasn't a strong enough retracement or anything like that. Or it went back to this chop zone. So I was just kind of like, I'll be conservative. I want to stick with my system. There's nothing wrong with that. And I stayed out. But then when we come here, we begin to form this flag, this controlled buying flag, and the same algorithm appears again, right? Like here, like so. I began to say, well, the last time it just simply broke. So perhaps this time it'll break again. So here's the same chart. So it comes down and it breaks, and I enter on the break, and it goes down enough where I'm able to protect by bringing the trade to break even. I was into a decent amount of profits. However, it was not enough that I was like, okay, I can scale here. I just set the trade to break even and I got stopped out. And the issue with this is, look, I mean, this is not a great structure. It's really just like an aggressive up and aggressive down. Where is the retrace? Where is the right shoulder really forming? Where is the liquidity here? There's not a whole lot going on. So it was not a great trade. And before I took it, I was like, this is not a 500 contract trade. It's really not. But I was lucky to get out break even. So short break even was telling myself to wait for a retrace on this one. But the last time it was simply a channel break, as I mentioned earlier here. And I thought on this one it would be the same, where it wouldn't really need that super clean, gentle retest right shoulder microstructure. However, I deviated from my system on this trade, which is not good. Because the thing is, in the morning I was quite disciplined with all my setups. But it is what it is. And I need to learn from that and grow from that. The interesting thing was with this one was like here is the potential shoulder, if you want to but here a head forms. You have this engulfing. This is a hammer doji, right, where it goes up and immediately gets rejected. So there's this long. It looks like this, right? I mean, of course you guys all know this. The candle would look something like that. It's a hard rejection of this upper level, and that's a good head. I mean, that's an interesting head. You can short here, and that's a better trade. However, your risks are quite great on that candle. So I was looking for some sort of gentle retrace, which we got. So I had very tight risks, and then I just got a break even. I think it's not the end of the world. I think it's a fine trade. However, I do want. I mean, look, I'm gonna go over the best setups of the day later in the video, and you'll see that there was really some incredible trade setups today. So, and here is the last trade. I just want to show very quickly. I charted out where I wanted to be entering. So inverse head and shoulder, left shoulder, head, right shoulder, and then there is this white, rejection, rejection, rejection. You can see here rejection, rejection, and I wanted to take this breakout, and the breakout worked well enough that I was able to get into, I think SPY moved like 30 cents in my direction, so more than 1R, and like I saw the 3-point move, and I moved it to break even because I thought, well, we'll break VWAP, and we're gonna hit the top of the channel. But the thing is, the top of the channel was like 3 or 4 ticks away, and my break-even stop was like 15, 16 ticks away. That is terrible RR, right? That's terrible risk reward. It's not well managed. So that was a trade where I was like, man, I that was not necessary to be holding to break even, because the top of the channel was only a few ticks away. And I was thinking, this is going to be the head, and it's very anticipatory. This is the head. We're going to grab this right shoulder liquidity here, and I can add right on this like break and retrace, and we'll continue up further. But that's obviously not what we got. And especially with how strong the spare leg is, like what am I trying to do to go long without, like this is really where the best structure. This is where you want to be taking 500 contracts right here. And I don't think this was terrible. I was in good profit. It was just, I managed my risks, and I took the break even. The thing is, like my technical analysis is getting better. Today I had every trade go into a good amount of profit. It was simply, a choppy day. The system where I protected certain points by moving it to break even as opposed to taking profits. And today I moved them to break even, and you get stopped out for break even, and it's like. Well, break even, it was more like a 2-3 tick loss, which is nothing. I mean, it's like 1/4 of my 1R, 1/4 of 1R, or something like that. So, or 1/6 of 1R. So it's not a big. It's just trade management, keeping the losses very small. And the unfortunate part is, though, I have to think like, if I would have managed those trades in a certain way, I could have extracted some profits. However, that's something I need to work on, I think. And as I become more comfortable, I'll be able to be more discernful and discretionary of like, okay, I don't like how this market is so choppy. So if it reaches 1R, I'm going to just take profits. I'm not going to be bringing it to break even because the market is going up and down and up and down and up and down. There's no like trend continuation. So if the market gives me those profits, I'm taking those profits. Like I'm not going to be sitting around waiting for a 10-point trade. I'll just take the 2-point or the 3-point or the 4-point. And yeah, that's something I need to be more comfortable with doing if the market is very choppy like it was today. But overall, look, from an analysis, technical analysis standpoint, I think it was great. I was pretty happy with it. One of my better days in a while, definitely. So let's go over the best setups because there was a lot of really beautiful stuff. It was an awesome day, for sure. So first and foremost, like I said, we already went over this one, but here was the break of that tapered white channel. But then we formed that cup, and this was the one I missed because I was not at the computer and I was out. And I was distracted. So we come out, we break out, and then we retest, wick, we retest here, and start forming the support here, support at the previous tapered white channel, and that forms our handle, right? Cup, here, handle, and then we have the strong breakout on this candle holding support, and then here is a potential great entry. I think Eric entered on here, but for me, once we came down and we retested this area, formed that right shoulder, right? And here we like really formed that right shoulder IHS, and reject VWAP here, and you can buy. And I mean that's with a tight stop right below VWAP right there, which allows you on that one candle rejection. I mean on that wick rejection. So I think that was a great setup. Cup and handle. I think it was holding support around the 5 DMA here. Breakout, and you're set. And then we come out, and we already had noticed that we were holding some very strong resistance at the top of this orange algo here, which was Eric's magenta, right? Eric's red magenta-ish looking algo. So, you know, resistance, 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 and if we chart that here, it lines up beautifully. So we say, oh, well, this is a potential controlled buying. And here was an entry right on the break of that, right, with the head and shoulder. And this was something I didn't take because I just wanted to be, you know, this was an aggressive morning, very choppy, big spike up, big spike down, big spike up, and now another big spike down, and I didn't want to be involved. I wanted to, unless there was like a break and a strong retrace with a hard rejection, forming that right shoulder, I didn't want to be playing around. But this was a great trade setup if you took it. And then we come down here, and this is where things get nasty, where you just chop, 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 and it gets very difficult to read the structures until, you know, you can use these algos, this blue, teal one, to get some clarity. But you have to be so careful because these supports at the bottom of the range, right, and these resistances at the top of the range are obviously holding strong. So it's like you can't just take this teal break. I mean, you would have gotten destroyed here. And you can't just take this orange controlled buying break because you would have, you know, this probably would have stopped you out, or you would have had to de-risk. You need to wait for closes below and then retest and rejection. So once you start seeing a candle that looks like this, you know, where you have that strong rejection of this level, which also forms that right shoulder, then you really have a reason. So, okay, I can maybe take a trade here. It's near the top of the range, right? It's near up here where all of the bears have been shorting, and it's rejecting here, and it's forming that right shoulder, and there's that same controlled buying, and, you know, you see candles like this that are holding, rejecting the same algorithm. Is that wick there, hard rejection down, and you have a clear target here at the bottom of the range. And that's why you have to be so careful of entries like this, because it's just like, well, you're shorting at the bottom of a range of where support is. So you need to be wary of that. Then there's this algorithm here that was coming down and holding us really nicely. And failed breakout. And you need to be very careful. But once you get this break below, all this liquidity here, and it immediately, you know, engulfs back up, and it shoots back up to grab all of this again at the top of the range. And there we go. I mean, this was another potential entry right on the break of this yellow. And yeah, it would have made for a nice trade. That was a massive candle. However, even better, and it rejected the top of this red channel, right, which I got from here. Right. And that rejected very nicely. But once we get this top here, then we start to form this really nice double top, right? Right at the top of the range. So we have, you know, look at all these rejections here, all at the top of the range, all in this general area. So shorts make money here, is what we're seeing so far. And we reject here very aggressively, and then we come back up right to the top of this channel, and we reject again. And here's where you could take a trade on the rejection of this red channel with the rejection of this area, this area, this area at the top of the range with this head and shoulders pattern as well, forming right here. Right? Head, left shoulder, right shoulder on the break, and boom, you have a great trade setup. So once you start seeing those, you know, this is another engulfing hammer doji, right? Because here's the bear bar, here's the bull bar, and then it gets engulfed, and it looks like this. Right? Sorry, this is the body. that's the top wick, right? And that's what it looks like on a higher time frame, because this gets engulfed and we get a hard rejection. And we already know that sellers are here. I mean, look at this wick, 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 hard rejection. And so that's a great setup, I think. And not only that, but we start to see that we are in we have this strong bear move here, right? This strong bear leg. And we start to form a pretty clear bear flag with the tapering teal algorithm, right? Where we have this buying first, we have this buying first with the orange, and then it tapers very quickly into our teal algorithm. So we know that the buyers are getting weaker, and this is that algorithm. So you're like, well, there's a good chance, given the strength of this move, that this is a bear flag, and that we're going to forming a head and shoulders here. Head, head, shoulder, shoulder, to break us out. And that's exactly what we got. So, yeah. Sorry, that's a mess, of course, but I hope that makes sense, right? Where we have the shoulder, head here, tapering teal, showing weakness on the slope of the buyers, right? It's not as strong anymore. Tapering, in range, after a massive move down, potential higher probability bear flag. Then you get this hard rejection at the top of the channel, engulfing doji here, giving a bar that's like this, right? And you have a beautiful trade setup. And you can ride that down straight to low of the day. I mean, there was nothing stopping you, right? So that was nice. Then we chop here, and this happens. I don't know what was going on. It was just, a choppy day. These sort of things happen, and we shoot up to the top. And if you draw, I mean, this is the beauty of the algos, right? If you draw from connect here to here, and you copy paste that up here to here, then you have the perfect rejection point at the top of the channel. And then we start rejecting the same area, right? We grab on this move, we come up, and we grab all this liquidity, we grab all these stops above, and then we reject hard, right? And we reject hard at the top of the channel, but we get these massive high volume rejection wicks. Come down and we form that head again, an obviously range bound trading price action, and we break down. And then we get that same orange controlled buying, forming that bear flag after the strong bear leg, right? So it's the same orange, right, that you see right here, the same exact orange buying. And we break here. However, on a day that's this choppy, you don't want to just, for me, that's why I don't like these breaks. You don't just want to be taking the break. You want to be taking the break. And then we come up and we retest and we grab this liquidity area here. And then we form that right shoulder. And exactly like all the other trades, this gets completely reversed nearly. On a higher time frame, it looks like this, right? Where you have that strong bull bar and it gets reversed like 90% of by that strong bear bar. So it looks something like this. And that's a great trade setup. And then you can short right there because you have that right shoulder on the break of this orange buying algorithm, retest. So this was all just a bear flag, right? This is just more controlled buying, which is confirmed. And it's rejecting the highs here at the top of this range where sellers have been, and it's rejecting the top of this channel. So that is extremely messy, and I'm a lot to take in, but I hope you understand, or at least